I think the main thing was a very sharp tightening in financial conditions, which basically took away the rationale for the Fed to move in the fourth quarter. And that created a lengthy pause. Now I think they've also said the data have deteriorated, pretty sharply. You look at some of the headline numbers, payrolls 20,000, big retail sales decline. Probably a very weak first quarter for GDP, we're at 0.4%. And so they've moved more decisively to the sidelines. I think that makes sense in this sort of environment. I also think, though, that actually the underlying economy is not looking that bad. I think the slowdown has been exaggerated by some special factors, some one-off things. The moves in financial conditions, which have partially reversed, government shutdown, inventories. So I think if you look at the data underneath the surface, we're actually starting to see some stabilization. So I don't think the growth outlook's that bad, but I do think it makes sense from the Fed's perspective to move to the sideline and see what happens.
So you're in the camp then that says that the next move from the Fed will be a hike, not a cut. It just might take a while?
Yeah, I mean, we're fairly sanguine on the risk of recession. We don't think that the economy is showing any recessionary signs. We're not seeing we don't have the sort of imbalances that have caused recessions in the past. Significant overheating of either the real economy or the financial markets. So I think we'll get back to an above-trend growth pace, and in that environment, I think you probably still see, some monetary tightening. We're currently in the first quarter of 2020, so that's a while away, and of course all of this has to be confirmed by the data getting better. Otherwise, this is not going to happen. I think you do need to see stronger growth, and you need to see some increase in inflation, but I think there's a reasonable chance that happens.